Bitcoin, the world's first decentralized digital currency, has come a long way since it made its debut in 2009. There have been eventful moments in recent years with major developments such as the Bitcoin halving, institutional adoption, and regulatory scrutiny. So, what exactly are the major events in recent times that have shaped the history of Bitcoin? Let's take a look at the latter stages in Bitcoin history. If you're new here, please take a moment to like this video, subscribe to our channel, and turn on post notification. Now, let's continue. The $5 million Bitstamp Hack. In the fast-paced world of cryptocurrency, security breaches can have significant consequences. One such incident that made headlines was the Bitstamp Hack of January 2015. In January 2015, a harrowing incident unfolded at Bitstamp, a popular Bitcoin exchange platform. The 6 employees of the organization found themselves in the crosshairs of a malicious phishing attempt that spanned several weeks. The perpetrators behind the attack employed cunning tactics, using Skype and email to lure their targets into opening files containing malware. What made this phishing attempt particularly effective was the fact that the attackers took great care to personalize their communication with Bitstamp's employees. They researched each individual's personal history and interests, crafting messages that would appeal to their unique sensibilities. By doing so, they were able to gain the employees' trust and entice them into downloading malicious files. Tragically, the phishing attempt proved successful, resulting in the theft of roughly $5 million worth of Bitcoin. What seemed like a rarity occurred once again as Bitcoin experienced a system hack the following year. The following year witnessed the largest theft of Bitcoin in recent memories. Bitfinex security breach. In August 2016, Bitfinex, a cryptocurrency exchange headquartered in Hong Kong, experienced a massive security breach with enormous consequences. The exchange announced that over 2,000 approved transactions were sent to a single wallet from users' segregated wallets. This caused a significant plunge in the trading price of Bitcoin by a staggering 20%, which led to the value of the stolen Bitcoin dipping to around $58 million. In the aftermath of the hack, Bitfinex acted quickly by halting all Bitcoin withdrawals and trading and subsequently began the process of tracking down the individuals responsible for the breach. Despite the security measures that Bitfinex had in place, which included securing the funds with BitGo, a leading multiple signature security firm, the hack still occurred. In an effort to mitigate the losses incurred by the breach, Bitfinex reduced the account balance of all exchange customers by 36%. Even those customers whose accounts were not affected by the hack received BFX tokens in proportion to their losses. Unfortunately, this was not enough to prevent the exchange's access to US dollar payments and withdrawals from being curtailed. In February 2022, the news broke of a New York couple who were charged by US federal authorities with a staggering conspiracy to launder Bitcoin. Ilya Lichtenstein and his wife Heather R. Morgan were accused of conspiring to launder the cryptocurrency, which was valued at an astonishing $3.6 billion at the time. The charges brought against the couple carried severe consequences. If found guilty, they would each face a maximum sentence of 20 years in prison for the alleged conspiracy to launder money, and a maximum sentence of 5 years for the alleged conspiracy to defraud the United States. The case is still on trial till date. With the consecutive security breaches hitting the crypto community, it was only a matter of time before Bitcoin did something about it. 2017 was the year for that. The Segweit system upgrade. In 2017, the Bitcoin community was buzzing with anticipation as a major software upgrade known as Segregated Witness, or Segweit for short, was approved on July 15th. This upgrade was controversial because it aimed to solve one of Bitcoin's most pressing issues: scalability. The Segweit upgrade would support the Lightning Network, a promising solution for faster and cheaper transactions. It would also improve the overall efficiency of the Bitcoin network. Finally, on August 23, 2017, Segweit was activated on the Bitcoin network. The impact of this upgrade was immediate and dramatic. In just 1 week following its approval, the Bitcoin price skyrocketed by almost 50%. On July 21, 2017, Bitcoin was trading at an impressive $2,748, representing a remarkable 52% increase from the previous day's price of $1,835. Despite the positive reception, not everyone was on board with Segweit initially. A group of Bitcoin supporters who preferred larger blocks and were unhappy with the proposed activation of Segweit forked the software to create a new cryptocurrency called Bitcoin Cash on August 1, 2017. This was just one of many forks of Bitcoin that would emerge in the coming years, including Bitcoin Gold and others. Nevertheless, the Segweit upgrade remains an important milestone in the history of Bitcoin, and a testament to the community's commitment to improving the cryptocurrency's scalability and efficiency. And with the vast improvement the digital currency had made in its early stages, it was only a matter of time before people, organizations, and even countries took notice. South Korea was one of them. South Korea recognizes Bitcoin. 2018 was the year the world's attention turned to the regulation of digital currencies, as discussions on this topic intensified across the globe. The months of January and February were particularly eventful in this regard, as the spotlight shone brightly on South Korea. South Korean government officials hit the headlines about their regulatory initiatives popping up regularly. These pronouncements bore a striking resemblance to the numerous ban announcements that had been issued by the People's Bank of China in the past. Interestingly, at the end of January 2018, a South Korean court delivered a landmark ruling that recognized the economic value of Bitcoin. This was the first time such a ruling had been made in the country, and it set a precedent for future legal battles involving cryptocurrencies. To further clamp down on the anonymous trading of digital assets, the South Korean government introduced a nationwide cryptocurrency account system. This system prohibited the trading of cryptocurrencies anonymously, effectively bringing to an end the anonymity that had previously been associated with trading these assets in the country. To one success story to one of complete misery, 2019 brought again another unfortunate event that highlighted the upside-downside world of events: the Quadriga bankruptcy. The bankruptcy of Quadriga. Quadriga Fintech Solutions was once the leading cryptocurrency exchange in China, known for its user-friendly platform and secure handling of customer assets. However, in 2019, the company's sudden collapse sent shockwaves throughout the crypto world. With a staggering $215.7 million in liabilities and only $28 million in assets, Quadriga was forced to file for bankruptcy. The situation was made all the more complicated by the mysterious death of the company's CEO and founder, Gerald William Cotton, in December 2018. Cotton had been on a trip to India and reportedly died due to complications from Crohn's disease. His passing left Quadriga without access to its cold wallets, which held up to $250 million in cryptocurrency belonging to over 115,000 customers. As the story unfolded, rumors began to circulate that Cotton may have faked his own death as part of an elaborate exit scam. In December of the same year, the law firm representing Quadriga's former users sent a letter to the Royal Canadian Mounted Police asking them to exhume Cotton's body to confirm his identity and verify the cause of death. The reason was that they felt Quadriga was actually a Ponzi scheme, with Cotton using customer deposits to finance his lavish lifestyle and then faking his death. In June 2020, the Ontario Security Commission officially concluded that the company was indeed a fraud and Ponzi scheme. The commission stated that the deceased Cotton had committed fraud by opening accounts under aliases and crediting himself with fictitious currency and crypto asset balances, which he then traded with unsuspecting clients. PayPal adopts Bitcoin feature 2020. In the year 2020, the world's leading online payment system, PayPal, declared that it would be launching a new feature that would allow its users to buy, hold, and sell cryptocurrencies. This move by PayPal, which has over 300 million active users worldwide, signaled a significant shift in the perception of digital assets. For years, cryptocurrencies had been viewed as a fringe investment, accessible only to tech-savvy individuals. But with PayPal's entry into the market, cryptocurrencies were suddenly thrust into the mainstream. The company's press release revealed that the new cryptocurrency service would first launch in the United States, featuring 4 of the most popular digital currencies: Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. Users would be able to easily buy and sell these currencies with just a few clicks, thanks to PayPal's easy-to-use interface. But the company's plans didn't stop there. By early 2021, PayPal announced that it would allow customers to use their cryptocurrency to shop at any of its 26 million retailers. This groundbreaking move would further cement the legitimacy of digital assets and open up new avenues for their use in everyday transactions. PayPal's adoption of Bitcoin ensured other corporate bodies towed the same line. One of them was Tesla. Tesla's move to the Bitcoin world. In early February 2021, Tesla declared that it had purchased $1.5 billion worth of Bitcoin, a move that signaled a major shift in the perception of digital assets and their role in the global economy. Not content with just buying Bitcoin, Tesla also revealed that it had planned to start accepting cryptocurrency as a form of payment for its vehicles. This move was seen as a major win for Bitcoin enthusiasts who had long been advocating for greater acceptance of digital assets by traditional businesses. And the impact of Tesla's announcement was immediate. The price of Bitcoin surged to an all-time high of $44,141 as investors rushed to take advantage of the news. It seemed as though the cryptocurrency had finally broken into the mainstream, with a major corporation publicly endorsing its use. But just 49 days after accepting Bitcoin as a form of payment, Tesla suddenly reversed course. In May 2021, the company announced that it would no longer be accepting Bitcoin, citing concerns about the environmental impact of mining the cryptocurrency. Tesla might have dropped Bitcoin in 2021, but the country of El Salvador picked it up. El Salvador accepts Bitcoin as legal tender. The year 2022 will be remembered as a turning point in the history of El Salvador, as they became the first country in the world to adopt Bitcoin as legal tender. President Nayib Bukele's commitment to Bitcoin was evident in his appearance on the cover of Bitcoin magazine's year-end edition, where he was portrayed as the founding father of hyper-Bitcoinization. He was hailed as a visionary leader who had embraced Bitcoin as a means of achieving economic freedom for his people. In a column for the magazine, Bukele called on Bitcoin enthusiasts around the world to support El Salvador's efforts to challenge the global financial elite. He saw the adoption of Bitcoin as a way of empowering the people of his country and breaking free from the chains of centralized control. Bitcoin has seen a roller coaster ride of events that have shaped its history. The digital currency journey has been far from smooth, as it has originally experienced many violent dips and pumps. With the future of Bitcoin hanging in the balance, it's worth asking, what will be the next big event in its history, and how will it impact the world of finance and technology? Share your thoughts with us in the comments below.